Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great Christmas, safe Christmas. And, of course, we're going to be kicking in the new year, folks, 2013. Have to love it. Let's take a look at one of our 4 agreements. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Market-wise, let's take a look at it out here. We had the Dow Industrials down 24, NASDAQ off 22, S&P's off 5.5, gold contract flat at 1,660 an ounce. Silver, up 14 cents at $30.04. Platinum, 1,537 an ounce. Bonds, up 11 ticks, trading out at 147.19. King dollar, down 7 ticks at 79.67. The euro, up 43 ticks at 132.26. And the yen, once again, gets weaker, up another 85 at 85.63. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do we have? Okay, we have a cash S&P, folks, at 1420.12. Now, we got into 1416 today. Bottom line, volume out here is 466. You know it's going to be light volume. The correlation comes right back to last Friday. Last Friday, we came down hard. It came down with 1.8 billion. Now, what you didn't do, you came down price-wise, but bottom line is that the swing point, the lowest swing point still hasn't been tagged yet. That lowest swing point from the 14th being 1,411. Okay, so what do we have here? Well, you have 466 million shares out here today. Friday we did 1.8 billion. So what I expect you're going to get here is some kind of a small little bounce. That's on the shorter term, meaning tomorrow and the next day. What you'll see next is a very fast down draft. Because when we came down on Friday, that basically set up that we're going to at least test the lows that were generated out here in November. The lows in November were 1343. The volatility, I expect is going to pick up here. What we do have is this. Tomorrow, you can actually have some real trading. Thursday, you can have some, let's see. Thursday is going to be about the only day. Friday, it's going to get slow again. Monday, we are opened on the 31st, okay? It's a full day. I don't expect a lot of action. When we talk about the fiscal cliff, I suspect that, guess what? We're going to be going into 2013. They've already jumped off the cliff, I think. Bottom line is that that's when the volatility will really begin. That's your S&P. We go over to the Dow Industrials and we take a look at the Dow. It's the same setup in the Dow. We have inside the Dow is this. Dow actually got under that swing point of 13,118. So we're at 13,114 right now. That sets up next leg down, 12,900. I expect what you're going to see, though, is that we're also going to run down to the November 15th level, which is the 12,400 level. NASDAQ Composite. Now, what you have with the composite is this. Talking about coming down hard. The NASDAQ, folks, composite came down at 2.8 billion last Friday. We went lower today. Volume contracted. The composite, on a longer range basis, wants to run down to this 2,600 area, which is the 2,800 area, rather, which is the low also of November. We'll see whether it can get a bounce in between it. Now, when we talk to composite, we have to absolutely talk Apple, continually talk Apple. So, if we go over and we take a look at Apple, this is what you have with Apple. Okay, so what we did out here with Apple today is this. She's at $513. She wants to get into and test that 508.75 area that was generated in November. I suspect we're going to break down here. The technical, it's set up technically. The lower that you come down, number one, and don't hit the swing low, the more dangerous it is each and every day that Apple wakes up. Now, that's on a technical basis, okay? We take a look at this. We'll put this back a couple years. The way we have it right now is that Apple's trading where it was trading in February of last year. There's nothing to support Apple, down on the 420 area. So it's a big number. It's a big number, and it's come down with monster volume. It's a big number. Now, that's on the technical basis. Let me tell you on the fundamental basis. Now, this is going to get interesting. Every Christmas, I'm always buying Apple stuff. I got an Apple family, no doubt about it. Well, guess what? I went to the Apple store, and I was getting the E-mini pads, and they're cool. Let me tell you, they're cool. I have a larger one that my sister gave me last Christmas, but I looked at both of them, and the smaller ones are absolutely dynamite, folks. There's no doubt about it. The screen's cool. It's really light, the whole buzz. Well, they were out of them. This was, let's see, Christmas was Monday. No, Christmas was Tuesday. So this was last Saturday. So what ends up happening, I ended up buying a couple cards, so they could get them. What's going to be intriguing here is to find out that because they were out of them, did that mean they sold less of them, or did they sell so many that it's going to be a blowout number? And this is where I can't wait to see how this shakes out, because this is where the fundamentals, what happens with fundamentals and technicals is this. You're both looking backwards. Fundamentals, you're going to believe what they're going to come out with the figures. Technicals, we're saying, okay, where's the money going? Where's the high volume going? They're selling. And my take is that they're selling, period. And it's going to be interesting if they come in with good numbers, but if they still sell it down. Apple wants to go to lower price. Our phone number is 877-927-6648. Let's take a look at some of the high-volume stocks in a low-volume market. Today, what we had is this. You had Bank of America up 29 cents. Research in Motion, we'll take a look at that. That was up $1.22. We had the Marvell Technologies was down 85 cents. You had, let's see, Alcoa, that's a dog. That was up 11 cents. We had AIG up 15 cents. And some of the large caps out here, this is what we had inside the large caps. You had Caterpillar up 19 cents. Big Blue is down 45. We had Big Mac down 55. In the automobile industry, we go take a look at Ford. Ford has some nice volume. You talk about strength, folks. What Ford had out here today is that she's going for the swing point. She's been in a consolidation. That swing point is up there, is at the 1305 level. Excuse me, right now we're at 1279, and she's coming up there with some velocity. She's gonna need it, but she's definitely coming up there with some velocity. On a weekly basis, what you're going to be looking for is something over about 400 million coming into that area. So she had a good start on it today. I'll tell you that. She did 138 million shares out there today. We go over to the housing sector. The housing numbers came out again this morning. Yeah, Lennar, that's flat after a huge run-up. Housing numbers kind of went like this, folks, okay? Home prices climbed more than forecast in October, indicated a rebounding real estate market that will boost the U.S. economy for the first time in 7 years. There's no doubt, folks. Well, here's what we have. Property in 20 cities increased 4.6% from October of 2012, the biggest 12-month increase since May of 2012. The median forecast of 30 economists in Bloomberg survey projected a 4% gain. What you're going to see in the property, in the real estate market is this, folks. We're off the bottom in many cities. Chicago looks like it's still having a problem, but a few of the cities that didn't have problems at the very beginning, those are higher-end cities, and they're having some problems. And I suspect they're going to continue having some problems. The cities and states that have already got hit, they're off the bottom. They're off the bottom pretty good. What you're going to see here, which is pretty cool, is that you're going to see not only the price structure of real estate go up, you're going to see the cash flow inside those communities go up, and it's going to go up dramatically. Why? Because bottom line is that you're going to see more jobs, and you're going to see jobs created very, very quickly. And these are jobs that trickle up and down very quickly, because once you have workers going out there, you need pickup trucks, you need tools, you need all of the above. If you do have an interest in the real estate market, come over to our website at TFNN. You'll see I did a white paper about Florida real estate. We did open up a fund, the Tiger Real Estate Opportunity Fund. If you're an accredited investor, you can invest in that. You can check out the white paper first. Hit the white paper, check it out. And that's no matter where you are in the country, folks, because you'll see the St. Louis Fed has some great statistics as to what and where basically jobs are, where housing is, and where the demographics are. The demographics are a big deal. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.